Chris, where are you looking for diversification? And first of all, is diversification kind of where you're looking at internationally at the moment?
I think in terms of sectors, I think the rate story is so beholden to everything that's going on at the moment. I mean, it's pretty clear that this higher for longer and a 6% Fed funds rate, which some people had been speculating on, are not synonymous with economic prosperity. And clearly, the market's feasted on that last few days, and we found a line in the sand. But what we've now seen is that long duration assets are starting to outperform. I know we're seeing a little bit of selling coming in the front end in twos this morning. But I think if we were to see a continued move lower, which I'm skeptical on, but if we were, then I think the Nasdaq's going to continue to outperform. Your tech stocks, your Qs, they're going to work a little bit better. I'm still hesitant on the banks. I know I just talked about what's going on in overseas banks, but of course we're watching the tape in some of the mega cap US banks, which I think will outperform. I think they could actually prosper as a result of some of the measures that we've seen from the FDIC, the Fed, and of course the Treasury. So watching for a bit of buying playing through that, and I think that could spur some life back into markets. But I think this is still a time to be pretty cautious. I think what we've been seeing, the moves in rates and banks, tell us that we're going to see a slowdown in economic activity going forward. And I think that's something that keeps us pretty cautious on equities at the moment.
Chris, is there anything you like in Australia, particularly as it feels like SVB was kind of the final thing that has now caused the markets to think that the RBA could and perhaps should be done?
Yeah, we've been not pricing anything really for the next two meetings. I think we're sort of toying with the idea of one more rate hike from the RBA, and I think obviously we're still waiting for that April CPI number that comes in, or the Q1 CPI number that comes in late April, to give us a sense of whether we could see something in May. But I think anything that's specifically beholden to the rate cycle, the bond type stocks, they could be interesting. And obviously from a currency perspective, which is probably my closer focus on this at the moment, it's whilst we're seeing the US dollar under pressure and high beta effects is working, will we see a situation where rate differentials matter more for the Australian dollar? And I think that's going to be something that we're going to be looking at very closely, especially if we were to see growth coming under pressure. As I said, I think there's a real possibility of that. The banking sector is your bellwether. Then I think the Australian dollar could probably underperform a little bit as that sort of economic bellwether there.